It's a bit of a cloudy evening right now in Hawaii, so I thought it would be the perfect time to go over 30 things that I wish I knew when I was getting started in crypto. And realistically, if I knew what I'm going to tell you in this video in 2017, I would have made so much money in such a quicker amount of time. I would have also just lost a lot less money along the way at the beginning. And so the first thing that I wish I knew is that the less you do, the more you'll make. When I started in crypto, I was making moves left, right, and center. I was doing so many different trades, so many different investments, because it felt like the more I was doing, the closer I would bring myself to making money, as if work ethic and working hard is how you make money in crypto. It was like a business. In a business, you grind and you put in all these hours, and apparently it leads to making more money. And in business, it does, but in investing, it doesn't. In investing, I found that the lazier I became in terms of the actions that I took, like the actual buying and selling, the more money I made, because if I only have to make 1 or 2 moves a year and I'm patiently waiting for those 1 or 2 moves a year, or maybe 3, 4, 5 moves a year, those were going to be really, really profitable moves, because I would be able to wait for the most opportune time in the market to make a decision. When you're a beginner, you think that having your money not in a coin is a bad thing. You think multiple months of doing nothing is a bad thing. And in reality, that's not true. And that's what I've had to learn, that the less moves that I was making, the more money I was making, or even better so, the less money I was losing, because I was only making profitable moves. This tweet here is so true. In discretionary, the right position is almost always flat. The right action is almost always do nothing. 5 times a year, there's free money on the floor. You basically pick it up and you do nothing, and that's outperformance. And the second lesson is that growth is exponential, not linear. I have this photo here on the screen of a note that I wrote myself back when I was like 19. And I was basically thinking to myself, do I go to university? Do I get a trade? Or do I get into crypto investing? I literally thought in my brain, if I can just Forex my money every year for 5 years, I'll have $32 million. And I didn't write that down. I remember I didn't write that down sarcastically. I didn't write that down thinking that it was unachievable. I wrote that down thinking that that was genuinely a path that could happen. What I didn't understand at this time, what I wish I knew, is that growth is exponential. You don't make money for years and then you make a lot of money all of a sudden in like a year or 2. And that's what happened for me in crypto. I didn't make money for like 2-3 years, and then all of a sudden I started making money. The growth was exponential and absolutely not linear. And the third lesson is you make 90% of your wealth in 10% of the time. 90% of the time that you have in the market is just you trying not to lose everything for that easy money period that comes where basically everyone's making money and you can just absolutely print, because what you want is volatility. You want a coin to go from 0 to $1 billion and back to a 0, because that volatility is where the money is. The problem with bear markets is nothing is really moving. There's not much money to make. There's not much volatility. So you don't really want to be trying to force profits at that point in time. So what I've realized is that, like, when I look at all the money that I made over the past 7 years, most of it came from very brief periods of time where the market was just free money. And something else I wish I knew is nothing is worth holding through multiple market cycles except for Bitcoin. You know, Bitcoin is one of the only assets in the world where any person of any net worth is actively trying to accumulate more of it. It's one of the only assets where price can basically rise to any level and its holder base will still have a reason to hold it. Altcoins don't have this, because imagine a random meme coin, right? There is a certain price where no one will want to hold it anymore, where they've made enough money that they just don't want to put their money in it. They're just too rich to care about meme coins. They've made too much profit to keep it in something so risky. Bitcoin doesn't really have this problem to a certain extent. When Bitcoin's at $1 million a coin, if that happens eventually in the future, there's still a reason for the billionaires to hold it, because they need somewhere to put their wealth. With meme coins, they don't need somewhere to gamble. Once they're rich, they don't need to gamble anymore. Meme coins are a way to go from poor to rich, but once you're rich, you don't really need it anymore. So that's why all these altcoins in one mental model you can view tend to die off, because only poor people and people with moderate wealth try to accumulate it, and then it rises to a certain level, and then the people holding it sell it off. They don't really need to hold it anymore. They're already wealthy. And so that ties into the next lesson, that alts are purely to stack more Bitcoin. You know, a lot of people actually told me this in 2017, 2018 when I got into the market. I didn't wrap my head around it for about 5 years. Bitcoin is not just the best asset in crypto to hold for the long term. It's actually one of the best assets in the world to just hold in general. I wish when I got into crypto, I had a look at the macro picture and understood the macro game more of crypto, which is that you are here to get more Bitcoin. And I wish I didn't fall for the scam of altcoins for as long as I did for the first few years. I wish I understood that Bitcoin was actually the best thing, and I internalized that, and that I was trying to get more of Bitcoin, not just more of US dollars. And this is why in my mastermind, I teach everyone to have a barbell strategy. Basically, my recommendation is you hold Bitcoin or you hold something that can 3 times outperform Bitcoin, because anything in that middle range, I find you just tend to underperform Bitcoin and it's just not worth the extra risk. In regards to altcoins, they have been performing pretty terribly for quite a while, but I think that's going to change. I think we are on the cusp of the next big alt season. And the reason for that is I've been studying the correlations between when gold pumps and when QE starts and when alt seasons have previously occurred. And I think that everything that you want to see lining up for an alt season is lining up. And I don't see anyone talking about this, to be honest, at the moment with the data points that I've been looking at. And that's why I'm hosting an emergency live webinar to go over all the data that I've been looking at and to give you guys an action plan for what I think you should be doing over the next 6 to 12 months to basically profit from this. What we're going to be talking about is the gold pump and how it's a sign for the next Bitcoin boom, the 10 steps that previously have led to an alt season and why I think we're at step 7, the exact reasoning and thesis for why I think alt season is going to occur in 6 to 12 months, the top sectors to focus on, and what to do to be fully prepared. And if you want to sign up, it's free. It's in the description below. You have to put your email in, and that'll be really, really valuable on the 6th of May. The 6th thing I wish I knew is you should always assume upfront that everything is a scam till proven otherwise. Everything is guilty until proven innocent. And I think if I had this perception earlier, I would have fallen for less scams, and having the mistrust upfront of people in crypto is the best way to approach things, because I would say 95% of people or more don't have good intentions. Because it's such a high percentage, you're safer assuming people are wrong and scamming, and then with proof that they're good, then you can begin to trust them. But if I had that mental model earlier, I would have lost a lot less money. Number 7, you'll lose everything multiple times before you make it big. This is one of the most controversial and painful lessons. Everybody I know that's made it big lost everything at one point, whether it was from a scam or they just bag held a coin down 99% or they got liquidated. It doesn't matter. Everyone lost everything at some point. So if you're a new investor and you're coming to the market thinking that you can somehow be some special snowflake that avoids this, that you can make all this money without losing everything at least a couple times, it's not going to happen. When I started in 2018, I bag held Tron down 95% and I basically lost everything that I invested. 5K when I started had like $100 at some point during the bear market. And that's normal. That's fine. That is completely normal. There's nothing wrong with that. That's crypto. Welcome to the game, right? So mentally prepare yourself. If you haven't lost everything or most of the capital before, it's going to happen. Like, you have to go through that to be able to avoid it. Another controversial lesson is number 8, crypto yield opportunities 99% of the time are a scam. My view is that you should only pursue asymmetric opportunities, meaning an opportunity with a lot of downside, a big reward, and a small risk. I believe that most yield farming opportunities in crypto are small reward with a big risk. If something goes wrong with the smart contract, if, I don't know, the rehypothecation of leverage building up in the yield farming sort of opportunity breaks, or just something goes wrong, you lose everything. You don't just lose 5-10%, you lose it all. And the upside that you're getting is maybe 10, 15, 20% or more, depending on the opportunity. But the upside is small and the downside is massive. It doesn't really make sense. If you're going to get a yield higher than 30%, that yield just comes from token inflation, right? You can see this photo here on the screen. If you look at the APR of yield farming, you've got the real yield, which is a small amount, and then everything above that is just token inflation. They inflate away the token you're holding and they give it back to you. So you basically be the equivalent of someone stealing money from your pocket and then they give it back to you as if it's a gift. It's like, nah, bro, that like you just gave me my money back. Like that's not a gift. The biggest problem with yield is it's essentially a cesspool of overt rehypothecation. They have opaque risk disclosures and farmed stables with terrible protocol mechanics. And when you combine those things together, it just doesn't make sense to me. Lesson number 9 is start with risk instead of returns. I think if I look at my investing journey at the beginning, all I cared about was upside. Where do I make the money? What do I do to make money? How much can I make? Blah, blah, blah. But I never once considered really the downside. What could I lose if I'm wrong? What does being wrong look like? What are the different scenarios that could happen where I am wrong? I never actually asked those questions, and that's why I never made money. I began to make money when I started considering the downside in the investments that I was making in crypto. I started asking myself the tough questions that I didn't really want to ask myself. When I asked those questions, I started making money. And that's people's biggest problem, I think. They look at all the upside, they look at all the money they can make, but they don't focus on the most important part, which is minimizing the downside. And if you look at the photo on the screen, you can see the difference between someone being profitable and unprofitable in trading, especially, is managing the line. Because if you buy and sell without a strategy, strategy, just random positions. You're going to make some money sometimes, you're going to lose some money sometimes. If you can put a stop on the losses and you can keep holding the wins, you are able to become profitable, right? It's that management of the downside that gives you the profit. And you can measure opportunity with the same yardstick that measures the risk involved. They go together. That's a famous quote from Earl Nightingale. And this photo is another example. Winning more, losing less. You can see what's more important. So the 10th lesson is what actually drives Bitcoin and crypto price action. I wish I knew this earlier. I would have been able to buy at the bottom and sell towards the top a lot easier if I had understood why Bitcoin was moving, why it was. And the two biggest things driving Bitcoin is the long-term perspective and the short-term perspective. On a shorter time frame, price is just moving in which direction liquidates the most amount of people. So if a lot of shorts build up, the price is going to go up. If a lot of longs build up, price is going to go down. And it's basically just a whipsaw trying to liquidate these people. But on a long time frame, Bitcoin's price is driven by its fundamentals. It's driven by how many people hold it, what's the investor activity, is there an increasing amount of options for you to buy Bitcoin, right? Can you buy it now on the traditional world from banks, ETFs? And how much is the infrastructure surrounding Bitcoin being developed? And you can see in this photo here that the blue is the long term and the red is the short term. Your goal is essentially to buy below its fundamental value and sell above its fundamental value. The next lesson is you should set realistic expectations, or even better, set none at all. When I started in crypto, you saw that photo that I had. I planned out all the profit I was going to make. Every year for 5 years, I'm going to 4x my money. Honestly, these days, I don't really set portfolio goals. I might say like, I want to hit 8 figures, but I don't put a time frame on it. And I really think putting a time frame on goals in crypto doesn't really make sense. In business, if you say, I want to make $1 million by the end of this year, it's good because it's going to motivate you to push hard to get there. But the problem with crypto is you can't force profits. You can force growth in business by just working more, by having the hustle mentality, but you cannot force profits in crypto. And so setting a timeline is going to put pressure on yourself, which is going to affect the clarity and the objectivity of the decisions that you're making. This is why the worst investors in crypto are those who come to crypto because they need money. I've got people messaging me in the past where they'll say like, Daniel, I need to pay for my wife's emergency surgery. I have most of the money. I'm coming to crypto just to make a bit more to pay for the surgery. These people every single time lose everything. They never make money. The only time they made the correct decision in that situation is when they left crypto and they didn't try to gamble their money to pay for a surgery or to buy a car that they needed or whatever it was. That is why you need to stay away from setting expectations, because price targets, portfolio targets, they don't happen in a way that you want them to. The market will give you money when you're ready for that money, but you cannot ask it. You cannot expect it. It will be given to you at the right time. And also when you set targets and you have expectations, it cements your brain into a certain way of thinking. If you think I'm going to sell this coin that I hold at $10, you're now boxed into this one scenario out of millions of potential scenarios. The price could go to 9.9 and stop. Are you just going to be boxed into selling at 100 at $10 and you're just not going to sell it at 9.9 even if it makes sense to sell? So when you set targets, you box yourself into outcomes, and that's not a good way of thinking. Lesson number 12 is that influencers create liquidity, not alpha. For 3 years when I was in crypto, I followed Twitter accounts calls like anybody else. I didn't know what to do, so I just copied other people. I basically lost every single time. The coins that I bought that they said to buy didn't go up, and the ones that I didn't buy were the ones that went up. Don't know how I did it. I was so bad at following these calls. And realistically, what I realized once I became the influencer on the other side of the equation, I realized that influencers are only going to tell you about a coin for 3 reasons. 1, they're selling you a course. 2, they're convincing you to buy a coin. 3, they're collecting internet clout. And all of these 3 reasons for posting a coin is when the coin is already up from their entry. You can only sell the course if you're in profit on the coin. You can only convince people to buy a coin if it's going up, because that creates FOMO. And you can only collect internet clout if there's something to collect clout on, profit. So all the times that an influencer would talk about a coin is when it's going up. And when a coin has already gone up, it's not worth buying. And that's what I've realized. Influencers create liquidity, they create profit, not alpha. Publicly. Publicly is a keyword. In their private groups, different story. Lesson 13, you won't keep profits until you've completed minimum 1 market cycle. If you view the market cycle as a circle, the lessons of different parts of the market cycle can only be learnt at different parts of the circle. Until you've completed a full circle and learn all the lessons of each part of the circle, you are not going to be able to make money, because when that circle comes around again, there might be a lesson that you haven't learned at the top of the circle, and now you have to learn that lesson in your second cycle. And that lesson being learned is not just, oh, I learned the lesson, I didn't lose any money. No, the lesson learned is you didn't sell at the top of the bull market and you bag held, and you didn't realize that altcoins go down 95%, that your altcoin wasn't special. That might be the lesson, losing all of your money. The lesson might might be, I should have known not to use leverage. When you use leverage, you're getting liquidated, so you lose all your money. So the key is you have to understand that there are lessons that can only be learned at certain stages, and until you've learned them all, you're not going to make money. A lot of people think, oh yeah, I'm going to make money in my first cycle. Unless you can somehow learn the lessons before you've experienced that period of the market, which is basically impossible. I know one guy who's managed to pull that off, but everybody else, they had to pay their tuition. And then after the first cycle, usually after 2 cycles, that is when you make money. Because you pay a tuition fee, that leads into point number 14. You decide your tuition fee. I've had people come to crypto worth hundreds of millions asking me to teach them how to invest, and they are just as bad at investing as some dude from Nigeria with $5. Like, they are the same level. Doesn't matter how smart he was, doesn't matter how good he was at business. He was going to have to pay the tuition fee of all of his money in the same way that the Nigerian was going to have to pay his tuition fee of $5. So when you come to crypto, you're going to lose everything when you start. That's normal. You decide how much you put in, and thus you decide how much you lose. So if you want to minimize the tuition fee, just put in less when you start. And that's my recommendation. Start small, lose small, so you can come back when you're good and win big. Lesson 15, don't rely on investments for income. So when I started, like I said, I thought I could 4x my money every year, and then I wouldn't need an income source. But realistically, even now with around $7-8 million, I still like to have income, because if I just didn't make money every month and I'm spending 30K a month out of my 8 million hurts. It really does. And it would affect the quality of my investment decisions. So I like having income to offset my living expenses so that I can make better investing decisions and be a better investor and make more money. And that's what I recommend for you guys. Don't rely on your crypto gains for income. It will fuck with your brain. Lesson 16, I recommend equally weighting your altcoin positions. And I wish I knew this earlier. A lot of people have a portfolio, and I see this in my mastermind with new members. They'll have 20 different coins. I'll ask them, why do you have 20 coins? And they'll say, oh, this guy I follow online said to have 20 coins. And he'll literally have like $1,000 in one coin, and then he'll have 10 coins where he has like $10 in each. It doesn't make sense because the position is so small that he's not even really going to care about it. So he's not going to manage that position correctly, and thus he's basically gambling. We want to avoid doing things that lead to gambling. And so if you weight your altcoin positions equally to a certain extent, maybe you give a little bit less in a tiny market cap coin than you would in a 100 million market cap coin, but a relative speaking weighted sizing, you're going to care about each position, and you're going to have conviction in that position, and you're going to manage the position better and make more money. And as well as this leads into the next lesson, number 17. Don't hold more than 5 to 7 altcoin positions. Similar logic, if you have 20 different altcoins, you're not diversifying, you're just standardizing your returns, because you're not going to be able to manage 20 coins individually. If you pick any random day near the top to sell your altcoins, there's going to be 5 that are near their top, 5 that are near their bottom, and 10 that are sort of in this middle range. And when you sell it all at the same time, you're getting the standardized return of all of these different positions that all these different altcoins are in. And you may as well have just held one or just held Bitcoin, because that is the level of return you're going to get. You're going to get a very standard return. Altcoins give you outperformance when you can capture the volatility, when you can buy it really low and sell it really high. But you can only do that if you can time the market. You're only going to time the market if you have a small enough amount of coins that you can actually individually time correctly. And this is going to happen more and more where specific sectors perform at different times. You can't just put money into 20 coins and they all top at the same time. That was 2017, 2018, maybe 2021. But now, no. Everything's topping at different times. Different sectors pop off at different times. You can't do that anymore. The 18th thing I wish I knew is read more investing books. One of the best things I did, and I still have these lessons internalized to this day from these books that I read like 5 years ago, is really just read these old investing books. Some of the books I recommend is The Psychology of the Stock Market, Reminiscences of a Stock Operator, Market Wizards, and Devil Take the Hindmost. These are the 4 best investing books in my opinion. I also made my own investing book just made for crypto. It's called The Psychology of the Crypto Market. It's free. You can find a link to that in the description below if you want to read it. But yeah, it's a very good book that I wrote. But realistically, like if you read my book and these 4 books here, you're going to be a massively better investor. Lesson number 19 is understand everything about market cycles. I wish I studied the market cycle a lot earlier. I started studying the market cycle, the concept of it, a little bit when I started, but really I didn't understand how important it was. Because if you don't understand how a market cycle works, you're going to not understand where you are in the cycle and you're going to make the wrong move. If I knew that we were in the bear market because I had studied it, I would have bought more at the bottom. If I knew what a top looked like because I studied what market cycles were, I would have sold more near the top. The understanding of the market cycle is everything. And you can see understanding a market cycle also lets you understand things like this photo where you will have a bear bias after a bear market and a bull bias after a bull market. It's one of the most important lessons of market cycles. And if I had internalized that earlier, I would have made more money quicker. Lesson 20 is flat as a position. When I began investing, my brain told me that I needed to allocate money ASAP. And I think this is a problem a lot of people have. They come to crypto, they join my mastermind and they say, Daniel, I need to buy things right now. What do I buy? Tell me what to buy. I just joined. Let's get started. They think that buying a coin in a portfolio is like building a business. The sooner you start the business, the better. That's not true. In crypto, if you waited 365 days before buying a coin, that actually is a really good thing. If you waited a whole year for the right opportunity, that's fine. Because like we said earlier, you only need to make 1 or 2 moves a year, and that's how you outperform the market. You don't need to be making hundreds of moves. So flat is a position. Holding cash months at a time, it gives you optionality, it gives you objectivity of the market, and it allows you to be cash ready to deploy when everyone else is poor. That's the biggest problem people have with bear markets. They don't have money. Everyone's poor in the bear market, so when the bottom's in, you don't have any money to buy. But if you can stay in cash, stay flat, chill, wait for the bear market, have a lot of cash to allocate, you're going to crush it. Lesson 21, your goal is to catch 6/8 of a bull run. This is actually a lesson that I learned years ago when I was reading those old books. This one was from Reminiscences of a Stock Operator. The line goes, one of the most helpful things that anybody can learn is to give up trying to catch the last eighth or the first. These are the 2 most expensive eighths in the world. They have cost stock traders in the aggregate enough millions of dollars to build a concrete highway across the continent. I learned this to be absolutely true. Don't worry about catching the bottom. Don't worry about selling the top, because it's going to be basically impossible to do so. If you can consistently catch the 80% in the middle, you will make money long term, because the goal is to follow a strategy that will work over a 10-year time span, over a time span of doing it 100 times. Because if you have a strategy of buying the bottom or selling the top, realistically, you might get it right like 1 in every 20 times. But the time you get it wrong leads to you getting wiped out. You want to minimize portfolio wipeouts and maximize the profitability of a strategy over a large sample size. And you do this by making money for 80% of the trend, because it's going to be way easier to do this. And it's a strategy that can replicate with a high success rate over many, many years, over many market cycles. Now, lesson number 22 is find your edge and build your system around it. For the first 3 years, I had no edge. Realistically, like, it took me a long time to get an edge. Because I didn't have an edge, I just copied other people. If I don't have an edge, then someone else must have an edge, so I just copy them. It didn't work because I just copied their Twitter posts, and that just doesn't work. It was once I found an edge, and in fact, in 2021, one of my biggest edges after 3 years of doing crypto was long-term investing using funding data to identify periods of extreme fear and buying during those periods. That's the edge that I basically built. And then I created this system around this edge that I had called the Hunter algorithms, which was sending me automatic signals to buy and sell at inflection points, so near the bottom and near the top. I designed it in 2021 with a developer friend of mine, and this is the main system for my investing even to this day. It's worked really well ever since. It's had about an 80% accuracy since then. Of all the data I've come across, it is my favorite thing to use. Other edges, including like Memecoin investing in different things, I didn't make money in any of these sectors until I found that edge. And you guys will need to do the same thing. You need to find your edge and you need to build systems around it. Number 23, posting educational content was the best thing that I ever did for my portfolio. A lot of people ask me, like, why do you post videos still if you got all this money? Like, why do you even post videos in the first place? You're just trying to sell a course, blah, blah, blah. What people don't understand is that posting content is actually the highest leverage thing that I do for my personal portfolio. I met 90% of my network through content. So Twitter and YouTube guys come across my stuff, they message me. They've made millions, so I bring them into my circle. We have a big circle of friends. I learned investing 10 times quicker, teaching it to others. And number 3, being a guru showed me behind the veil, behind the curtain of how crypto really works. Because when you're on the other side of the equation, you go from retail to influencer/KOL, you see how the game really works. When you see the behind the curtain of how this shit works, it is all a giant scam Ponzi. And I didn't truly conceptualize it until I was on the other side of the equation. What I would tell myself, my younger self, I wish I knew to post content earlier or to post more content. It would have just made me more money. Number 24, get allocated when the bottom feels close, not when I think the bottom is in. So that's one of the biggest issues I actually still face to this day. I'm not a perfect investor by any means, and definitely my biggest problem is I don't allocate heavy enough to an opportunity when I know I should. And this ties into when you buy near the bottom, you will never have certainty that price is at its bottom, because to have certainty in an investment, you pay premium on price. The higher the price goes, the more certainty you get that you're making a good decision. When you buy it at the bottom, you have the least certainty, you have the least amount of satisfaction after you buy. And that's sort of another lesson, actually. In crypto, it's going to hurt regardless. You either have the pain of making the right decision, but it feeling wrong, or you have the pain of making the wrong decision, which feels good, but it actually ends up losing you money and feels bad. And so you will always, every decision you have to make, decide if you want the pain up front or if you want the pain to come later on in terms terms of your portfolio. When the bottom feels close, I have found in my experience that that is always the bottom. Because when the market is saying there is an almost guaranteed drop of another 20 or 30%, and you shouldn't buy here because it's definitely going to go lower, that is always when the bottom is in. Remember that. Number 25, study hard and find a mentor. This is actually an email I sent to my first ever mentor, the first ever multimillionaire that I knew. And he mentored me completely for free. And this was my favorite trader on Twitter. He's still there if you type him up. And this guy was an absolute legend. He helped me through direct mentoring and insights. He personally taught me how to trade. High leverage opportunities. I worked in one of his businesses related to trading. It was proof to myself that I was, had potential, because up until that point, friends, family, society just told me I was another idiot with a shit memory. The fact that a multimillionaire wanted to help me was like, oh, maybe I have potential. And number 4, it opened my eyes to what was possible. I didn't really know any millionaires until this point. So he was giving me the mindset and way of thinking of someone with money. And that's what I was trying to achieve. It was make a lot of money. And so he gave me the mindset for that. I wish I pushed for mentors harder earlier. I just wish I put more emphasis on this, because it really was the beginning of how my life changed forever. This was the first thing that I did that changed my life. Lesson number 26, if you're imagining what you can buy with your profits or the crazy profits you're about to make, that's euphoria and you should be selling. Every time I post a coin on my free Telegram, like, look at the big profits that I made, it's always the top. I remember posting Solana at like $270 after the Trump pump. And I was like, yeah, the Hunter Algo bought the bottom and now we're up big. That was the fucking Solana generational top. That was bad. Lesson number 27, meme coin price ceilings are determined largely by virality. When you look at a meme coin and you're trying to think, okay, how high can this go? One of the main ways is like how many people understand it, how many people find it funny, and how many people relate to the meme. And just for an example, Skibbity Toilet is a Zoomer meme, only 15-year-olds get it. That's not going to go very high. Chill Guy is a meme understandable by everybody. Every male on a deep psychological level gets the chill guy. And so that has a higher ceiling. Number 28, you can't force profits. So in most areas of life, we've already talked about, you can brute force a result. In business, just work more. In becoming an Olympian, train more. Becoming a pro surfer, surf more. Whatever it is, you want the result, work harder. In crypto, working hard is not going to make you money. In fact, the best way to view it is you need to be an obsessive learner and a lazy buyer. The idea of trading and buying and selling, you should hate that. In fact, that is my least favorite part of everything in crypto. If I could just never buy and sell and just only learn about crypto, I'd be fucking stoked. Like the process of having to connect my ledger, put the password in, do all these different things. I hate that. It's so boring. But that's good because I hate it so much that I'm only going to do it if I really have conviction in my investment. Now that I've done crypto for 7 years, the only thing I should be doing is acting on high conviction bets. So anything that's less conviction, I can't be bothered to buy. And then it doesn't even work out anyway. For you guys, you can't force profits. You can't make the market give you something that you want. The market will give you money. It will give you profit, and only in the proportion of what you deserve. Lesson number 29, stop copying Twitter plays. I know we talked about this a couple times already, but I just want to emphasize it again. Copying dudes on Twitter is not a reliable and consistent way to make money. And there is no way to prove otherwise that this is not correct. I know some of you are going to comment, but Daniel, I copied you with Toshi and it made me money, blah, blah, blah. Or Daniel, I copied this other guy and it worked. You can follow some plays if you want to, because sometimes it will work. But the whole idea of crypto, the whole idea of making money is you want to do things that reliably and consistently make you money. If something has a 2% chance of making you money, that's not a good bet. It's not a reliable and consistent thing. You need to make money from reliable, consistent things that have made people money in the past that actually work over a long time span. And just copying dudes on Twitter is not reliable or consistent. Lesson number 30, it's a marathon, not a sprint. If you want crypto to change your life, it's going to take a long time, longer than you want it to be. I know you come to crypto in your first year, second year, and you think that, you're going to make money this year. You will absolutely make money this year. However, if you keep it or not is a completely different story. In fact, this should be a whole nother lesson. There's a massive difference between making money and keeping money. Everyone in crypto in a bull run will make money. I made money in 2017, in December for 2 weeks, I made money. The easy periods to make money, everyone makes money. However, when it gets hard and you don't know to stop playing in the casino, how are you going to keep your profits when it goes from being very easy to make money to extremely hard to make money? So that's why it's a marathon, not a sprint, because when people come to crypto in the bull market and it's easy to make money, and the bear market comes around, they all leave. They leave for 4 years and then they come back in the next bull run. And because they left for 4 years, they didn't get any knowledge. They didn't learn how to make money in a bear market. They didn't learn how to keep profits. They just learned how to profit in a bull market when everyone else is profiting, but they didn't learn how to keep the money. And so that's why I was able to make money, because when the bear market came around, I kept studying. I studied, bro, whatever the Luke Belmar quote is. I kept studying. Sounds funny to say that, but literally, like, I kept learning. When other people left because it got boring and they weren't making money, I kept learning. It was a marathon for me. It was about 3 hours every day for 7 years, not 1 year of 12-hour days. I just stayed consistent, and that's why I won. So that's 30 lessons that I would tell myself if I was starting crypto today that I wish I knew earlier. And to be honest, there is a lot more stuff that I wish I knew when I started, and I covered a lot of them in my 4-hour free crypto course on YouTube. There's a link in the description below if you want to watch it. It is probably the single most valuable video I've ever posted on YouTube. I recommend watching that. I also recommend coming to my live webinar on the 6th of May. You'll see all the details on the site. It's free. You just got to sign up. And yeah, you're going to learn a lot, and I'll see you guys there. Cheers.